You got to be hungry.
Are you looking to invest in net lease credit tenant properties? This is for you then. My name is Christian Cotta, and this is the Net Lease Market Report for Q2 2023. This report is brought to you by the Boulder Group and presented by Hungry Investments. The purpose of this video is to help you understand where the net lease market is across the U.S. from a reputable group called the Boulder Group. So in this video and future videos, the intention here is to help break down current cap rates, where they're headed, as well as sales comps to give you a better idea of making educated net lease investment decisions. So let's dive in and take a look. As of Q2 2023, the national asking cap rates for retail, office, industrial, and overall have all been increasing. So the cap rate values, the property values, they are decompressing. We're seeing them raise to new heights compared to previous quarters and previous years. Across the retail sector from Q1 2023, we were seeing an average of 6.05% interest rates. As of Q2 2023, that had increased 12 basis points to 6.17%. Same thing with office. Office was up 27 basis points from 7 to 7.27%. Industrial from 6.7 to 6.8. So much lower basis increase, but still heading the wrong direction. If you're an investor that is looking to sell, heading the right direction if you're an investor that's looking to purchase. Overall, the net lease market increased 13 basis points from 6.27% to 6.4%. If we break this down a little further, we look at the number of properties on the market. We're seeing a drastic decrease in the total number of net lease properties available on the market. The retail sector decreased by almost 20%, new properties available. Office by more than 25%. So a quarter less opportunities as an investor to purchase these net lease properties. Industrial, 11.4%, and overall the net lease market saw a decrease in new available opportunities of 20%. The median national asking versus the closed cap rate spread. So the initial market asking rate, when a new property hits the market, their asking cap versus what it actually closed at. In the retail sector, the basis point change was about 7 points. So if a triple net McDonald's hit the market at 4.5% or 4.25%, the actual closed cap spread would look more like 4.95%. The bid-ask gap has definitely increased. In retail, it was up 7 basis points. So as we were looking at possibly exiting out of triple net single tenant retail developments at 5.5, we could expect that to be a little closer to 6.25%. The office sector, we saw a 17 basis point increase. So what it hit the market for versus what it sold for was almost 17 or 1.7% higher when it closed than what it hit the market at. And in the industrial sector, just a 3 basis point increase. On my screen here is a sampling of selected single tenant sales comps that the Boulder Group selected. We can see here close dates from May 2023 through June 2023 across industrial and retail. Tenant mix of anything from FedEx, industrial properties, to Chick-fil-A retail, Citibank retail, Sherwin-Williams paint, across the country from Virginia to Arizona to Florida, and pricing ranging from $3.6 million to almost $80 million on a single tenant net lease purchase property. Price per square foot ranged anywhere in here from $163, obviously on an $80 million property, to roughly $1,500 per square foot for a single tenant 7-Eleven. Cap rate spreads from as low as 4.98 to as high as 7.3. Most of these with anywhere from 10 to 15 years on the lease, with a couple sprinkled in with lower remaining lease terms of 3 and 6 years. So take a look here at where we're trending as far as cap rates. So if we go as far back as Q3 of 2021, if we follow my cursor right here, we can see that cap rates had hit all-time lows going back to 2004 of, if we look at office, roughly 6.75%. If we look at industrial, we were sub 6.75, closer to 6.5, and retail had hit an average of as low as 5.75 across the US. This may be independent to your particular market, but as an overall sector, net lease properties, those were the averages. And what we can see now is that by Q2 2023, all cap rates across all major markets, retail, office, industrial, are creeping back up quite considerably. So if we look here, retail's gone, like I said, from 5.75 to roughly 6.25. Industrial, not so much, maybe 6.5 to a little over 6.75. Office from 6.75 to above 7.25. All good things to keep into consideration as you're looking at net lease investment opportunities. This particular market report gives you a lot of great detailed data. Again, I commend the Boulder group for putting this out, and we will continue to use this information as we get access to these reports to help you kind of understand how to make educated decisions in the net lease sector, if that's the area that you want to invest with. If you're interested or curious in how to invest into properties like these, you can learn more at hungry-inc.com. You can take a look at some of the types of properties that we are developing and investing in. And as well, if you want to download this report, we will link this report to the Boulder group. So you can take a look at this PDF and have it yourself at hungry-inc.com. Make sure you're following Hungry Investments on all social medias to learn more about what's going on in the commercial real estate market, as well as investing in and learning about commercial real estate. My name's Christian Cotta. This has been the Q2 2023 Net Lease Report. Stay hungry, my friends.
You got to be hungry.